Hi everybody, I'm Adam Harris, a very proud member of Trade with Precision, and welcome to IC Markets Market Commentary. Before I get started, please excuse any background noises. I'm on a boat in the middle of the Ionian Sea, and so there's a little bit of sloshing and some possible boat noises, so apologies for that. So first of all, let's have a quick look at the markets. It's a very volatile period. There's a lot going on. It's actually a fluid situation is the way I would describe it, and actually I don't expect it to stop much. But when I do stop anytime soon, I think we're just at the beginning of it. But what I wanted to show you here, looking at euro dollar, we can see that we've broken to the upside here. So the euro gaining very much from a lot of the madness coming out. I want to say madness. One of the confusion and the constant volatility coming out of the US is the language I'd use. The dollar Swissy as well. Dollar Swissy also big kind of moves breaking through key levels of support. And so therefore, for now, my expectation is that that US dollar will continue to weaken. If we have a look at dollar yen as well, we can see that starting to break through key levels of support. So interesting enough, some of the trend traders, possibly swing traders on higher time frames, would be considering looking at trades in line with a weakening US dollar, but also not at the same time expecting increased volatility. So possibly tightening up on risk or being more selective about trading ideas. Gold here continuing to climb very much to the upside, producing a very strong bullish engulfing continuation candle. So for now, gold appearing to be some form of safe haven. We can see the markets running towards that. And so for now, if we break the high of last week's candle, I would expect gold to continue to climb. It's had a really nice correction. If we have a look at it from a daily perspective, really nice correction down to the previous highs. Therefore, it's now let off some of the buying pressure, and it looks very keen to keep going. Crude oil, very interesting to me as well. We've had this descending triangle forming for a very, very long time. We've ultimately broken through that level of support, and for now, my expectation is that it will come up to test that resistance, and we could get some trend continuation moves to the downside. Let's have a quick look at the Dow. So the Dow here, just showing you the kind of swings and very volatile days that we're getting at the moment. And to be fair, I would expect more and more of this. We can see China escalating the issue as well. I can't really see the USA stepping down at this time. So it feels to me as though we're going to get more and more of these kinds of things. But most importantly, ladies and gentlemen, most importantly, when I look at this from a weekly perspective, we've dropped below this 50-period moving average. We are not in a bull market anymore. We have a downtrend. We are absolutely at least not in a bull market, whether we're in a bear market, however you want to phrase it, but we are not in a bull market. Now, if we have a look at the monthly, and this would apply to all the other major indices, even if we finish with a very strong bullish green candle here, which might show potential moves to the upside, which I'd be surprised. At the earliest, I'm really expecting May to produce that. So for now, I'm very, very cautious because we could still very much drop down lower. And for me, I'm very much stepping out of the indices because there's just too much unpredictability with that at the moment. Even here, looking at the S&P, just too many of these very wild swings. Yes, is it possible that in the coming months we could see a recovery? It's possible in some form, and I will follow the technicals and see what the technicals are saying on that. But for now, I'm just commenting on the weekly. We're below that 50-period moving average, which means we are not in a bull market anymore. So it would be very unusual that we've gone from a bull market into a bear market and then back into a bull market within 2 weeks. That's very unusual. So I'm not convinced that we're there yet. I'd have to see more data, more evidence of that in the charts to be able to kind of commit to that on a more serious note. So, but I do expect big swings. You can see the candles getting much bigger now. So that volatility is showing itself in the swings on a daily basis. I'm very much avoiding engaging in those markets. But the currency markets so far looking relatively good. Commodity markets are showing at least some commitment to those trends. We have a look here at the FTSE as well. We've been actually looking for this bearish divergence for a while. So we're possibly even only at the beginning of some consolidation or correction here out of the UK. Bitcoin, very interesting as well. We're producing bearish candles, then very strong bullish candles. It's off the 50-period moving average, and so in some ways we could see a further push to the upside. But again, what you're seeing here is lots of buyers below this level, not lots of sellers above that level. Let's see if this week it can break the high and continue to push a little bit further. Nvidia as well, coming off these key levels from a monthly perspective. Let's have a look at this. We can see a bullish candle form here, but it has to close. So we're halfway through the month. I need to see how the month closes before I'm going to take any other further kind of decisions into consideration of that. Tesla as well, also a little bit of a bounce, but not as big of a bounce compared to some of the other, to the Mag 7. Very interesting, the smallest one there, and it's right up against resistance. So it's got a lower high here and a lower low. So we need to see what ultimately plays out this week, and finishing off with Apple, just so you can get a sense of perspective on that. Again, most of these are sitting below that 50 period on the weekly, and therefore, for me, we really have to get back up above that before I would consider saying, okay, we're not in a bear market anymore. So I'll leave with that. Plenty to think about. Exercising caution. I'm preferring the currencies against the dollar, the majors. I'm preferring to see gold and crude oil, and at least the market's moving now. And I'm super cautious and risk averse and risk managing like crazy on the indices and equities for the time being. I'll leave you with that. Thank you very much, guys. Have a good one.